You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 29th day of January, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. So that one is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step exactly how to take the trial. It'll take you about 3 minutes. We'll get your indicators up and indicating today. Your trial will officially begin tomorrow. I know that's a Friday, but don't worry, your trial will run all the way through next Thursday afternoon. You get 5 consecutive trading days, and the weekends do not count against you. There is no credit card required for the trial. We want you focused on what's being taught so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when you take the trial, you do gain access to the live training room, but you also gain access to everything else we do. We go to work Sunday night at 6 p.m. Eastern and literally work around the clock until Friday afternoon at 5 p.m. Eastern. So while you're on the trial, we're going to treat you like you were already a member, a bona fide passport holder with access to everything. Logic alerts, concierge trade alerts, weekly trading zones, everything. Discussion groups and Telegram. Just like you were a member for 5 consecutive trading days with no credit card required, so you can make a well-informed, intelligent decision as to whether or not what we do is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back with this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link So at 12 noon Eastern, all you have to do is click the link in the email and it automatically logs you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, and it's easy to remember. youtube.com/CFRN. The Christian Financial Radio Network since 2005. 21 years. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips because it allows you to literally see how we've evolved over the years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. Michael will be joining us at the top of the hour for a recap of what happened in the live training room this morning and a little live trading as time and the markets permit. But we'll get started where we do each and every day with our daily devotional. Now, the topic that we're currently on, you're waiting, God's working. Today's scripture is Philippians 1, verse 6 from the NIV translation. Being confident of this, that he who began a good work in you will carry it on to completion until the day of Christ Jesus. Again, that was Philippians 1, verse 6. Jesus would likely have begun his work as a carpenter while still a teenager, spending over a decade in that role. If you've ever felt like your waiting time is wasted time, consider this. Only 10% of Jesus' life was spent on what we might see as the most important part of his story. Like Jesus, we will all have carpenter times, when we're waiting for part of God's plan for us. This can lead us to wonder if we're truly living in his will. We might even feel like we should be doing more. But what if the time we see as wasted, God sees as having great worth? In God's plans, what looks like wasted time is often preparation for a greater purpose. Jesus being a carpenter, Moses in the desert, Sarah becoming pregnant very late in her life, all are examples of God working in what we might see as delays. Sometimes what we view as wasted time is actually the training ground for what God has in store for us. The lessons we learn and the obstacles we overcome equip us for growth and prepare us for what He has next. God will be with you in every season of your life. His love will surround you in every moment. He is committed, even now, to using every circumstance in ways you may not yet see. The master carpenter still knows how to turn everything his hands touch into something good. And He's not done with His work in your life yet. Remember, while you're waiting, God's working. Let's pray. Heavenly Father, thank You for the good work You began in us. Help us trust that You will carry it on to completion in Your perfect timing. Strengthen our faith, guide our steps, and shape us daily into the likeness of Christ. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Thursday. Speaking of Thursday, members only workshop tonight, 8 p.m. Eastern. Have your questions ready, and you can even email them in ahead of time or send them via Telegram. And any questions that get emailed in or telegrammed in before the workshop, we cover those first because we assume the person that's asking the question won't be able to be there live in real time. So we do those up front so that you get your questions answered right away. You don't have to wade through the whole workshop to get to that question that you had. Okay, and that's tonight, 8 p.m. Eastern. And of course, in order to get in, you got to be a member. So if you've been on the trial and you want to be in the workshop tonight, email Valerie, support@cfrn.net, and let her know you want to become a member. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow's down 15 points. NASDAQ is down 366. That's over 1.5%. S&P 500 is down 48, and the Russell 2000 is down 16. All the same color. In the commodity basket, crude oil up $2.20, trading 65.41 last. That's a gain of 3.5%. Gold down $28.60, trading $5,275 last. Silver down 70 cents, trading $112.80 last. In the Asian markets at the close, the Nikkei gained 16 points. Shanghai rose 6. The Hang Seng up 141. And in the European markets at the close, FTSE up 17. The DAX down 513. That's a little over 2%. And the CAC up 4. So we had a green day in Asia. It was a mixed day for the UK. And at the moment, it's definitely a red radio post-Fed Thursday here in the US of A. Let's take a peek at the news, then we'll get to the charts. 2 federal agents who fatally shot Alex Pretty in Minnesota were placed on administrative leave Saturday. The timeline marked a departure from a previous statement by CBP official Greg Bovino, suggesting the agents were working in another city to protect their safety. The news comes as videos unearthed yesterday showed a confrontation between Pretty and federal officers at a protest 11 days before his death. Pretty was videoed spitting at agents and breaking a taillight on an SUV before he was tackled to the ground. A lawyer for Pretty's family released a statement that nothing that happened a week before Pretty's death could have justified Alex's killing. While I don't agree with Alex Pretty's belief or all the people he was out in the streets with, I agree 100% that a human life is a precious thing, and none of this has to happen. Separately, officials arrested the man suspected of using a syringe to spray an unidentified substance at Representative Ilhan Omar on Tuesday. Omar was calling for Homeland Security Kristi Noem to step down when she was charged on stage. And as we mentioned yesterday, President Trump says he thinks that Omar was actually behind the whole incident. I watched the video last night. It was the first chance I got to really watch it. And she gets sprayed with this unknown substance. I'm doing air quotes here. Unknown substance. And instead of ripping off her sweater or calling 911, she just went back to her speech. So she's either incredibly dedicated and passionate to her cause, despite her own personal health and well-being, or maybe she was part of the theatrics. I don't know. Not accusing her of it, but boy, the internet's abuzz with all kinds of conspiracy theories, and that being the front runner. So we'll see where the investigation leads. As we know, the Federal Reserve yesterday held interest rates steady at 3.5 to 3.75%. For the first time since July, U.S. stock markets closed near the flat line on the news. The dollar also rebounded slightly after hitting a nearly 4-year low Tuesday amid concerns about the Federal Reserve's independence and potential U.S. military action in Greenland, Latin America, and the Middle East. The greenback's 1.3% slide against other major currencies was its biggest one-day drop since President Trump announced sweeping tariffs in April. Over the past year, the dollar's value has fallen roughly 10%, weakening Americans' purchasing power abroad. Trump has largely dismissed concerns, citing that a weaker dollar can also boost domestic manufacturing by making U.S. goods more attractive to foreign buyers. Meanwhile, the Swiss franc climbed to an 11-year high against the dollar. That was on Tuesday, and gold surged to a record $5.3 thousand per ounce yesterday. Investors have historically flocked to both assets amid geopolitical instability. Well, gold's definitely off its highs today. Money, money, money. Spotify paid the music industry more than $11 billion in royalties last year. The payout is reportedly the largest ever to musicians and comes amid ongoing scrutiny over the company's handling of artificial intelligence. The streaming platform has long been accused of underpaying artists. Musicians receive an average of 0.004 cents. Now, I'm not saying 4 cents. I'm saying 0.004 cents per stream, with compensation varying based on their share of platform-wide streams. Last year's payout exceeded 2024's by $1 billion. Spotify says half of the sum went to independent artists and labels. The company also claimed there are more artists making over $100,000 annually on the platform today than artists who were stocked on record shelves during the CD era. Spotify says its royalties account for about 30% of the recording industry's total revenue. Spotify has recently sought to ward off criticism over its inclusion of AI-generated music. The company said yesterday it will roll out features this year to verify artists' identities. You know, I've used Spotify. I don't know why it's such a big thing for so many people. I mean, whatever music you want to hear. I guess when you get old, you get stuck in your ways. I've just always gone to YouTube if I want to, because usually if I want to hear a song, I want to hear the video that went with the song. Not every song has a video, that's true, but you can pretty much find anything on YouTube. Now, musicians say that it's practically impossible for them to make a living selling their music. They make more money from ticket sales when they tour and from their merchandise, t-shirts, hats, etc. Far more than they do from actually selling their music. So the world of music that you and I grew up with, that landscape has changed incredibly. Okay, U.S. stocks, as we know from the numbers I just gave you, sank in mid-morning trading today on a tech-driven sell-off as investors came away from mega-cap tech earnings fretting about AI spending. Microsoft's slide deepened today after its earnings report spooked investors with higher than anticipated capital spending and a slowdown in quarterly cloud sales growth. That took some of the wind out of Meta's earning performance. Shares gained over 7% thanks to a surprisingly strong quarterly revenue outlook. And the company said it plans to spend up to $135 billion on its data center build-out this year, a boost to push to win the AI race. Microsoft's down 11.5%, almost 12%. Meta's up almost 10%. From Reuters, U.S. trade deficit widened by the most in nearly 34 years in November, amid a surge in capital goods imports, likely driven by an artificial intelligence investment boom, which could prompt economists to trim their economic growth estimates for the fourth quarter. The trade gap increased 94.6% to $56.8 billion, according to the Commerce Department's Bureau of Economic Analysis and Census Bureau. The percentage change was the largest since March of 1992. Economists polled by Reuters had forecast the trade deficit would rise to $40.5 billion. And it came in at $56.8 billion. That's a swing and a miss. Capital spending to as much as $135 billion this year. An all-in bet on artificial intelligence as the U.S. tech giants battle it out for supremacy in the next wave of technological advancements. Tesla will spend $20 billion this year on pursuits including AI, self-driving vehicles, and robotics, almost double Wall Street estimates, and plow another $2 billion into Chief Executive Officer Elon Musk's ex-AI startup. Musk also said Tesla needs to build its own semiconductor factory. Boy, this guy has his finger in every pie on the planet. Investors should look forward to a major AI acceleration that's been brewing within the tech industry for over a year, according to Meta's CEO, Mark Zuckerberg. That was on yesterday's earnings call. After an overhaul of the company's AI program in 2025, Zuckerberg said Meta will soon release new models and products. The stock rose by as much as 11% at the open after results beat expectations, and Meta's strong ad business convinced investors its planned splurge is viable. And U.S. applications for unemployment benefits inched down modestly last week, remaining at historically healthy levels despite recent high-profile layoff announcements. Applications for jobless aid for the week ending January 24th fell by 1,000 to 209,000 from the previous week's number, which was revised upward by 10,000. The Labor Department put that out this morning. Analysts surveyed by the data firm FactSet were expecting 205,000 new applications. Applications for unemployment benefits are seen as a representative of U.S. layoffs and are close to a real-time indicator of the health of the job market. Turning to Capitol Hill, or Middle America, parents did not ask for an education revolution. They were pushed into one. When schools closed, lessons moved online, and basic expectations broke down. Parents got a front row seat to a system that too often puts bureaucracy ahead of kids. What they saw changed everything. Parents want control back, and most Americans agree. A national poll conducted in November by the America First Policy Institute with Kellyanne Conway makes that clear. 50% of voters now support eliminating the U.S. Department of Education and returning education authority to the states. Parents learned the hard way that decisions made far from the classroom don't always serve students well. States and families are closer to kids. They see what works and what doesn't. Returning authority doesn't mean lowering standards. It means restoring accountability. Just as important is how education is funded. 65% of voters support letting education dollars follow the child. 70% support universal education savings accounts. Parents want flexibility, the ability to choose a school, tutoring, curriculum, or specialized services that actually fit their child. This shift is already happening across the country, but some states are now facing a simple question: will families benefit or will they miss out? Take Kansas. Congress has created a federal education tax credit scholarship that states can choose to opt into. When a state opts in, private donations supported by federal tax credits can fund scholarships for students in that state. And if I'm not mistaken, the Trump baby program, where every newborn gets $1,000 put into an investment account for the purpose of their education later in life or their retirement. I believe that takes effect today. And President Trump held a press conference today, a cabinet meeting. It's his 10th one since he took office. I don't think Biden did 10 during his entire 4 years. I could be wrong. Let's take a look at Logic 247. That is our 24/7 around-the-clock E-mini alert service. We're currently in week 391. Over the last 391 weeks, we've issued over 21,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 7 a.m. Eastern, so there's been a lot of movement in the markets today, so these numbers will change, and this afternoon or early evening she will update the recap as she does each and every day. At the time of the recap this morning, since the markets opened Sunday night, we issued a total of 26 alerts. Still waiting on the outcome of 9. That gave us 17 actionable alerts, of which 2 or 12% would have been stopped out based simply on market structure and that simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to help you learn how to read a chart. You need to know where to expect potential resistance, where to expect potential support, so that you can find the windows of opportunity in between those 2 points, because that's where you get your best high probability, low risk trade opportunities. Every logic alert has an entry price, long or short. Then an initial target designed to help you get your goal for the day. In most cases, there will be additional targets and then, of course, a final trade to target. If you never trade a logic alert, use them for the purpose intended, to help you learn to read a chart the same way you read a newspaper, a magazine, or a mystery novel. So we're a little light on the number of total alerts this week, but with so much going on and so much, well, these just, as you know, are not normal market conditions. So we don't put out the alerts for the purpose of entertainment. The purpose is education. And when markets are not behaving as they normally do, then putting alerts out just doesn't make sense. So as markets return to their normal rhythm, the number of alerts will return, usually somewhere between 50 and 70 a week on average. Now, 391 weeks is a long time, over 7 years. long before we had Logic 247, we had our original alert service, the concierge trade alerts. They're different in a lot of different ways. Now, the Logic alerts can come out anytime around the clock, but the concierge trade alerts don't. As I said, they're different in a lot of different ways, but for the purpose of this discussion, I'll just simply say they don't come out around the clock. They're published as a static report 5 minutes ahead of the Globex open each evening. There's some days I'm not able to get them out 5 minutes ahead of the open, but I strive to each and every day. So the Thursday session that we're in right now began last night at 6 p.m. Eastern. So 5 minutes before the Thursday session began last night. All of our members and trial members had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets and you see these targets drawn out on the chart, just remember that our traders had these targets 5 minutes before the market opened. Now, we're rolling today from the G to the J contract. I almost did it last weekend, but it was a little early, and you definitely should be on the J contract. So we're going to see what happened with the G contract because it was still tradable last night. And then we're going to roll it over when we get to that chart to the J contract, April. Okay, and you should do the same. Okay, let's go to where we always start. The S&P 500 E-mini futures daily chart. The bellwether, the S&P. All right, yesterday we put in a new all-time historic intraday high at 70.43. That's up here. Oh no, I'm sorry, no, this was Wednesday, this was on Tuesday. And we also put in a new all-time historic closing high on Tuesday. Now, as I've mentioned a number of times over the past week, when you put in a new all-time historic high, you typically get a sell-off. And what did we get? New all-time high yesterday, Wednesday, Fed day. Get my day straight. Now here's Thursday. So we ran way down this morning, okay? Now buyers have come in and gotten us back above the BBC. Honestly, I didn't see that coming, but there it is. So how we close today will really be important. This 50% fib extension could be potential resistance. We saw it as resistance here, support here, and yesterday. So the low yesterday was right at that 50% fib extension. Now, in order for price to continue to climb, we got to overcome the black step line. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. It's a green line. It just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. Price crosses below the green line, we're bearish and expect lower prices, higher prices, lower prices, higher prices, lower prices, higher prices. Pretty simple. So we spike. Now, if we close here, then we would have to say that this pullback held. It's where we close for the day on the daily chart. We got blue and climbing below. So, I mean, anything could happen between now and the close today. And I was really quite surprised yesterday. We did end with a doji on the day, Fed day, but I would have expected a much larger candle, kind of like the one we got today. But it is what it is. So we'll see where we close today, and then, as always, we'll trade what's in front of us. All right. All of the alerts, the Logic 247 alerts and the Concierge Trade alerts, they're all created on the 30-minute chart. Not because there's anything magic about 30 minutes, it's just the time frame I've used for years. And they say if it ain't broke, leave it alone. So here we are. Now, see, that just doesn't look like a Fed day. I mean, 2 o'clock right here. This is the Fed announcement. I mean, finally, when stocks closed for the day and earnings came out, that's where we saw the big move, the biggest candle of the day. So it looks like earnings had more impact over the markets than the actual Fed announcement. That is so unusual. But anyway, here's where we opened last night. We dropped through the BBC. We dropped through blue and climbing. And then we found support right here. Not a spot I would have anticipated support, but that's where buyers chose to come in. They got us back above the BBC, red and falling, turned to blue and climbing, and we almost made it to the long target. Now the long target was based off this high right here. What's the closest we've got? 29.5. What's this one? Yep, 29. Looks like 29.5. We pull back to the BBC. The pullback holds more often than not, but eventually it trades through. So we consolidated at the BBC, and then this was the Wall Street Open right here. And look at that drop. Just ripped right through the short target, through the zone, through the next zone, through the next zone, through the next zone, and finally found support at that zone. Now, just yesterday we hit the highest weekly trading zone, 7040/7041. And there's the lowest weekly zone. So as you can see on the way down, the black step line and red and falling ran parallel to each other on this massive move down. But take a look at the black step line. See how it's hooked to the right and it's about to cross, or it's trying to cross to the right side of red and falling? When that happens, we typically get a retracement back to the BBC. Now the pullback holds more often than not, but you never know if it's going to hold or not. You just got to be patient and see, then trade accordingly. If the pullback holds, then we get another leg to the downside. If the pullback doesn't hold and we trade through the BBC, then watch this area right up here where you have the bearish cross, where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance, at least the first time up. So should we get up into that area today, that in itself would be very surprising. fact, we're struggling even to get back to the BBC right now, but we could consolidate at the zone. One of three things happens when price encounters a zone. 70% of the times consolidation, 20% of the time rejection, 10% of the time the slice. That's when a 30-minute candle slices through a zone like it's not even there. Now, typically under normal market conditions, when you have a slice, as the move runs out of steam, price will typically retrace back to the zone it sliced through, continue in the direction of the slice. That did not happen here. Okay. We finally found support at this zone that was published Monday morning at 6:15 a.m. Eastern. The vertical line separates today Thursday, here's Wednesday, here's Tuesday. The horizontal lines are the weekly trading zones that are published every Monday morning, 6:15 a.m. Eastern. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members every week for over 16 years. December 14th of last year was the 16-year anniversary. And the only thing that's changed is nothing. Not a single thing. So this is going to be interesting. Okay, this step line trying to cross, if we just consolidate sideways, then that step line will cross. And when it does, look for the move up to the BBC. Then remember, it's either going to hold or not. And the only way to know is be patient and see, and then trade accordingly. On the Dow, here's where we opened last night. Now yesterday on the Dow, we hit this zone a couple times. We hit the lower zone here once. But we were really just kind of flat. I don't think I've ever seen a Fed day quite like that. And that was baked into the cake that they were not going to change the rates. So I guess it really was baked into the cake this time. So we opened here last night, 6 p.m. Eastern. Remember these targets, our traders had them 5 minutes before the market opened. So we dropped to the zone and the short target, where we consolidated like we do 70% of the time. Then we got above the BBC, ran all the way up to the zone, 49,270/75. Resistance always sends the market looking for support. Pullback held. Support always sends the market looking for resistance. Now this high right here, if you follow the horizontal line on the cursor, that is this high right here from 2 days ago. So we got this double top up here. Price comes back down to the BBC, blue and climbing turns to red and falling, and we trade through the target. We find support at the zone here, 835/840. Support sends us up to resistance at the BBC. And that resistance is now sending the market looking for support. There's potential support at the weekly trading zone. Red and falling, the black step line, when they get directly below price, they become potential support. Plus you got the short target. And then this little area right here, you see that little tiny wick sticking down and this wick sticking up? Put your cursor right between those two. Call it 48,975. That's an area for good potential support. And then of course, we've got this area, the zone and then the low of the session. On the Russell, here's where we opened last night, and we dropped. By the second 30-minute candle, we had hit the CTA short target, consolidated at the zone, support, sends the market looking for resistance. We consolidate a bit at the BBC, and then we get a leg, a retracement, a leg, a retracement, and then this run up. It takes out this high right here from yesterday, but it doesn't quite make it to this bearish cross. That's a sign of weakness, and that's when the bottom dropped. But the Russell did find support at 2629/2630, the weekly zone. Support sent us up to resistance at the BBC. Resistance is now saying us looking for support. Red and falling is directly below price. The black step line is directly below price. If price gets through those two, then watch this area right here, 2639, potential support. 2635, the zone, and then the low of the day. Now the NQ really got hammered today. Here's where we opened last night. Kind of just consolidated sideways, wide-ranging consolidation. We're above the BBC, below and above, and then below. But blue and climbing turned to red and falling. We got the bearish cross right there. And down we go. This is the 9:30 opening candle. I mean, that thing fell fast and hard. Finally found support at the weekly trading zone. On each one of the markets, although we dropped through several zones, every one we've looked at, the market found support at a zone. The zones that were published Monday morning at 6:15 a.m. Eastern. Again, once they're posted, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, the step line is attempting to cross red and falling, but we got a red candle. Now this area here, this is potentially support times 2. And then this area right here, 25,683 we'll call it, that's potential support. So the market's just, all the indices look very, very heavy. Crude oil. Here's where we opened last night. And we never made a retracement to the BBC. We just rocketed higher. 9:30 we hit the CTA long target. And then a leg and a retracement, a leg and a retracement. All the way up to the high of the day, which was 66.48. And a retracement back to the BBC. Now, blue and climbing is directly above price. When blue and climbing gets directly above price, that becomes potential resistance. When the step line gets directly below price, that becomes potential support. So for the moment, price is kind of trapped right here. It's got to do one of two things: break through blue and climbing, or if it breaks through the step line, then you've got the zone, which is potential support. When price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support till proven otherwise. And price is just consolidating sideways here for the last few hours. Okay. Now, here's gold, but this is the G contract. And the volume is now in the J contract. So I just want to show you, because when the alerts went out last night, I didn't check volume. I was planning this weekend to roll to the J contract April. Turns out it needed to roll a little sooner. So on the J contract, we made a big run up, put in like a double top there. Then we got below the BBC, huge sell-off. And again, where do we find support? Now we spiked the zone, absolutely, 51.85. Now that's the highest weekly zone this week for gold on the G contract, okay? So support will always send the market looking for resistance. Price tried to make it back to the BBC. It's struggling, but the step line is trying to cross red and falling. It seems like it's the same story on every market we've looked at. And then we got potential resistance right here. So let's make it official. GG CJ 26. Kind of looks the same, right? But it's a different contract. And by close of business tomorrow, based on the last 16 years of history, even though we've rolled the contract, we expect price to be at 51.85 or below. Now, over 16 years, have there been weeks where price closed above a highest weekly zone or lowest weekly zone? Yes. Yet there's been a handful of times, a couple of handfuls. I mean, we're talking 16 years, 52 weeks in a year. So, yeah, it has happened. But more often than not, it doesn't. Last, silver. It's not time to roll silver yet. Here's where we opened last night, ran up to the highest weekly zone at 119.08. Resistance sends the market looking for support, but it never made it back to the BBC. Then we ran up and rang the bell at the long target. Resistance sent us back to support. This time we did make it to the BBC. Consolidated. Support sends us looking for resistance. The high, 121.78 before the tumble. And that took us all the way down, back to the zone below at 107.97. Support bounced us up to resistance at the BBC. The step line's attempting to cross, but we've already got the pullback. So you got resistance overhead, potential support here, potential support here, 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 and here. Now, that comeback we had on the ES, well, for the reasons, hey, how you doing?
All right.
Okay, guys, see now the step line has crossed, and so now we're starting to print a green candle. So maybe we'll see this thing rise back up. Remember, it was almost at the 50 when we began the broadcast. I mean, we had put in this low, and then we had rallied all the way back almost to the 50. Now we've dropped considerably. So Anyway, that covers all the markets. So Michael will now give us a recap of what happened in the live training room this morning, and then do a little live trading as time and markets permit. And then I'll come back and wrap things up with our good word for the day.
Excellent.
Okay, looks good.
All right, here we go. Let me slide this off to the side just a little bit. All right, good afternoon, everyone. Today is Thursday, partners meeting tonight, 8 p.m. Today is Thursday, the 29th day of January 2026. If you have not taken a free trial with us, go here to mytradingxq.com, click on the purple button. There is no credit card required for the trial. Click on that purple button and it will bring you to, well, this page. I don't know where the page went, but bring it to this page. On this page, all we ask for is your name, your email, and your phone number. Down at the bottom, gives you TradingView login ID. All right, if we don't have that, we cannot provide the indicators. You want to give us that. All right, hit the register button. Once you do that, we'll know that you did everything, and we'll be able to set you up, get the indicators indicating on your desktop, get the information to get into the room in the morning. All right, so we had a pretty good morning today compared to yesterday. We had a very good morning, but a pretty good morning today. It started out kind of slow, but it picked up after the first half hour or so. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. You end up with 168 ticks on the NQ, 11 ticks on the Russell, 53 ticks on the YM, no gold, no crude, and 34 ticks on the ES. That puts us at $1,585 per contract on the morning session. Today it took 2 minutes and one trade to get to $1,000, which is the goal for the day. That was with 10 contracts on, or 100 with one. And we took a total of 56 trades. We had a bunch of trades today compared to yesterday, a bunch, with 9 stop outs. So we averaged, 83.93% of our trades today were break even or better. And we did have quite a few break even trades. And there were 3 trades today where my stop got slipped so much I ended with a negative value. I think 4 trades actually. When my stop slipped so much I ended with a negative value. So they didn't end up being stop outs. They were break evens that ended up giving me like -1 tick or -2 ticks. And they were +4 that they went there to. I think in one YM, I think did that. Anyway, we're at $20,500 on the month right now over 17 days, averaging $1,205 per contract per day. And I'd like to keep that above $1,200 after tomorrow. In the month of January, $1,200. I'd like to keep it at $1,200 or above all year, if I can. Curious. Last month, this was December, we had 1251. Then November, 1242, 1214, 1201, 1254, 1321, 1426, 15, 16, 15, 15, 16, 535. What month was that? Oh, that was December. December of 2024, we only averaged $535 a contract. That seems pretty low. Did we take half the month off? Maybe we only need 18,000 bucks. Okay, well, either way, every month last year we were over 1,200 bucks. So hopefully this year we'll be able to do the same. And did I get all the way down there again? Yes, I did. All right, that's that. Let's get into the actual trades we took. The majority of the trades today were on the NQ. So I'll just start over here with the Russell. I did all indexes today. Okay, all indexes, and I'm definitely going to need to do the control back thing today. There we go. All right, so this is the Russell. Leave the question box out in case anybody asks a question. Don't usually get any in this session, but just in case. All right, so on the Russell, our very first trade was a stop out. Then the next trade, we picked up 25 ticks. That got us to +10. So we're -15, then +10. And then this is one of those ones where I stopped out, but I should not have stopped out. And we ended up with we went from 10 to 11. There was a 1 tick trade, and it went from 10 to 11. Then we stopped out. That put us at -4. Then we had a bunch of small trades. There we went from -4 to +6. So yes, that was a 10 tick trade. And then we went from 6 to 17. Now that is, oh, I really screwed that one up. I took a long right there with the red background, but I still made a little bit on it. Went from 6 to the Russell. Here we went 6 to 15, and then I think I messed this up. Hang on. The stop out was right there. Then from the stop out was -4. Then we went to +6. Then we went to +15. Then I messed another one up right here. I think I took this one and I don't know why I messed that one up, but I did. And we went from 15 to, oh, this is one of those ones that, stopped me out. It slipped me. It didn't actually stop me out. It slipped me. I should have been at +1 on that and ended up losing 3 ticks. So it slipped me 4 ticks on the break even. And then we went from 12 to 22, went from 15 to 12, and then went from 12 to 22. And then had a break even, and then we went to 26, and then we stopped out somewhere. Well, there's a stop out in here somewhere. We went from 26 down to 11. And that was it for the Russell today. Okay. No trades happening right now on the Russell. So I'm doing all indexes today and tomorrow. I did bring up the gold, Dom. The gold is rolling to J, and I did bring that up. There's just no way I'm going to trade that, Dom. All right, so the YM. I think we were positive the whole day on the YM, but we did have stop outs in there too. You can see right there. Another one right there. Okay. So here's our first trade on the YM, and that one was off blue because it didn't actually hit the midpoint right there on the up close. But we picked up 15 ticks on that first one, and 1 tick there to get us to 16, then 20 to get us to 36. Then we had our first stop out, brought us down to 21. Then from 21 to, we had another stop out in there. I don't know if I missed this one, the stop out's right after it. That could be the case. Nope, we had another stop out in there, and we went down from 21 down to 6. Then we had a 1 tick that went to 7. Then a 11 tick that went to 18. Then we went from 18 to 33. 33 to 38. 38 to, somehow this is the stop out that I was looking at earlier. Went from 38 to 53, 53 to 63. Oh, this might be the stop out. 63 down to 48. And then we had one more right there. Okay, so there was another stop out. But we ended up with 53 ticks overall on the YM. Sorry, there was a stop out in here that I didn't have a red arrow on that I did count for in the numbers. And that was our last trade there. And we picked up, it looks like 5 ticks on that one on the YM. And that will bring us to the end of the YM trading. Okay, and the ES, were we positive on? Yeah, we're positive on ES all morning. Do we have a stop out on ES? We did have one stop out on ES. And control back on that one. All right. So, on the ES, we had right here was our first trade on the ES. We picked up 8 ticks. That's where we got the goal for the day, right there. We picked up 8 ticks on that one. Then we picked up 10 ticks on the next one to get us to 18. Then another 8 ticks to get us to 26. Then another 8 ticks to get us to 34. And then we stopped out somewhere. We had to break even. And another break even. We had more break evens today than we normally get. Then we stopped out pretty much to the tick and went down to 24. Picked up 2 to get us to 26, and then 8 more to get us back to 34. So 34 was the high of the day on the yes, and that's where we ended it. Okay. Go all the way to the end. There we go. Nothing right now. That was yes. Now the NQ is where we had the majority of our trades. So I control back on that because there were a whole bunch of bars on the 19 range today. Wow. Still all on the NQ right here. All right, there we are. To the beginning on the NQ. And our first trade on the NQ is right there, a stop out minus 25. Then we had a break even, another break even. We picked up 2 to get us to 23, then 1 to get us to 22. Then we did something in here to get us to plus 8, and then we stopped out and went to minus 17. And from minus 17, we went to minus 13, then minus 10, then plus 35, so that was a 45 tick trade. Then from 35 we went to 58, 58 we went to 103, and this is got that color because it didn't hit the mid band. I went from 103 to 109, and 109 to 113, somewhere right there, to 113. Then from 113 to 114, break even. 114 to 115, 115 to 100. Oh, that one right there was, this one right here. I went to 119 somewhere, and then this one right here ended up taking 2 ticks away. It should have been plus 4, and it slipped me 6 ticks. So I ended up going from 119 to 117 there, then from 117 to 128. Then this one did the same thing, kind of slippage thing. This should have been a plus 4, and it slipped me 5 ticks. From 178 to 127. Then we went from 127 to 148, and 148 to 151, and 151 to 168, right there. And that's where we ended it. Right, that was our morning. So there was a lot of trading this morning. And the NQ had a ton of bars. And right now, it's, I just had a long trade there a second ago. The ES did not, the YM did, and the NQ did. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. No credit card is required for the trial. And click on that, you'll be brought to the registration page. Just fill it out. Okay, just fill that registration page out. All right. So now we have, well, we've dropped right through everything right there. We have a chance for a trade over here on the NQ. That'll close right there on the NQ as a trade. Here it is. And it looks like it's going to stop us out. And it did. Let's go put that one in. Okay, this is today. NQ minus 25. And this is total trades. Oh, we didn't administrate it. We're going to have 15, 1. Oops. And 1. And we'll do 15 minutes trading here. Okay. All right. Let's get back in there and see what else we can do. That pretty much stopped us out to the tick. Didn't give another one yet. The S is not a trade. Nothing else is a trade right here. So we have 15 minutes to make some more money. Right, we're in some pretty tight chop here on the NQ, but that is a trade that just triggered. That stop has gone to break even, plus 4. That's 16 right there. Okay. Okay, back in here. We don't have trades anywhere else right now. All right, I don't see any questions coming in yet. Yeah, this is going to flip the YVR right here. I think they're all going to go down and flip the YVR right now. It's like they're all trying to turn around. Now, the bigger picture stuff, Dwayne went over a lot of it. And I was saying this morning when we got down here, we're bouncing off the midpoint. I was hoping we were going to end the day above the BBC right there on the daily chart. Okay, and I'm projecting we'll get up to here by the middle of February. That's what it looks like to me. Okay, so today we bounced off the midpoint. And I don't know if it's going to be a positive day or a negative day, but just as long as we close above the BBC today, I think it's going to be a positive thing. Okay. Markets have to draw down. After they move up significantly, they have to draw down. Okay, the YM's going to trade right here. There it is. Stop is not going to break even yet. We'll break even plus a tick yet. This is not a trade here on the ES. Now we've gone to 1 tick on the YM. Okay. In and out of that. The gold is not a trade right here. It didn't go a full cycle on the last move. Get back in here. Right now the YM has flipped the YBR down. So, well, we did that. We took a trade right there a minute ago. We're not in the overbought, so we don't have a trade there. We didn't go full cycle over here on the NQ, so we don't have a trade there. I think they're all trying to move down right now. I think that's what we're going to see here in a few minutes. All right, we need to hit the mid band and have a down close over here on the NQ. There's the hit. Now we just need the down close. Okay, there's the down close. And my stop's going to +4. I'm going to lock in +8. 12. 20. Okay. That puts us at 11 there, and a 4 here. Okay, and it turned right back up. Wow, glad it trailed that close. We don't have anything over here on the Russell. We don't have anything here. Actually, you can take the YM. You can take the YM because it went full cycle here, then all the way back up there, and so now it's a short. I'm in it. I'll bring it over and show you. Here it is. I wish I would have locked in a little more than that, but 4 ticks is what we're going to get on that one. Look at that. Just like that, we went from 0% to 83% of our trades. Nothing there. Nothing there. That was the one I just took. And nothing here. You ever wonder if someday I'm not going to be able to do this? I'm not going to be able to keep up with it. I should just go to one really slow market. Trade 30-year bonds alone. One trade a day. Hey, that was the thing we used to offer. We need to down close on the NQ right now. Down close on the NQ. It's almost there. Almost there. Flip the YBR on the ES. There it is on the NQ. And it gapped a little bit and it bumped my stop to 4 ticks. And I don't know what I got on that. But let's see what it actually gave me. It actually gave me 4 ticks. I can show you. There it is, 4 ticks. I guess I don't have to put that there, but I do have to put 4 more over here. It's 15 there. Now to 7 trades. 85% break even or better. It looked pretty grim at the beginning when we had a stop out for the very first one. This could be a trade here on the NQ. I gotta get, oops, crap. Okay, I was moving something out of the way and I accidentally put an order on. I just got it. Profit. The YM, we need an up close on that. Just need an up close on the YM. It was the NQ, I accidentally put it on. I took it right off after 3 ticks in profit. It was an accident. I won't count that. I'm looking for the up close here on the YM right now. So you see every one of these trades should make it up to the prior swing high, right? You can see where that prior swing high is or low is pretty easily. There's the YM trade. And you should be able to see that prior swing high or low pretty easily. Like right now it's 49.077 is a swing high. It's right there. Okay. This is not going enough into profit to bump my stop yet. Yeah, it looks like it might stop me out. We'll see. Russell's about to give a trade though. Watch Russell for the up close. Not out of this YM yet. This closes above the mid band right there. And I think we're going to have a chance with that trade. This is not a trade over here on the NQ. Looking for an up close here, an up close here. And the S is just out of sync. And we stopped out on the YM. Okay, we're still looking for the up close over there, but I don't think we are anymore. It's too low now. Let me put that stop out in here. Makes this -10. And that an 8. And that 2. Right, now we're back to 75% of our trades. Is this too low? Yes, it is too low. Cancel that order. Cancel. Now, when I say too low, see, the up close was not going to hit the midband. And the reason I knew that is because the midband was here at 0.6, and the low of that was at 0.4. So the high wasn't going to be anywhere near 0.6. That's what that means when I say it. All right, we went full cycle here on the NQ, so if we pull back and we bounce, we could have a trade. Did not go full cycle on the ES, we did not go full cycle on the YM, and we have not gone full cycle on the Russell either. So the only one that's likely to give us a trade really soon to be the NQ. Okay, because this is going to go down, then up 2, then down 1. This is going to go up, then down 2, then up 1. This is going to go up 2, down 2, then up 1. Do you see what I mean? Planning ahead. Is Jimmy in here? Jimmy is not in here. All right. What time is it? 1:26, 1:27. We have 3 minutes left. 3.5 minutes. Where are we on the session? We're up. Is this it right here? No, that's not it. That is it. That is it. So we're only up $250 right now. Okay. Well, oops. What just happened there? At least we're positive. I thought it would be up more than that. Did I do something wrong in this? I must have done something wrong. Plus 15, minus 10. It is what it is. This is actually a trade on the NQ. That up close off the mid band right there is actually a trade on the NQ. That's kind of, I've never seen it really come together. Well, I can't say never, but it's unusual for it to come together that way. Usually crossing the mid band, not bouncing off it exactly like that. I think I'll just wait on that one. All right, we need an up close followed by a down close on this one and this one right now. On the NQ and on the ES. Now we need another up close on the NQ. Needs to go down a little bit before it gives the up close. And the ES is ready. Right now the NQ is going to flip the YBR. That's not going to be a trade. The ES could still be a trade, but it's not there yet. And the YM could give you a trade now. Okay, so the ES and the YM are the potential trades right now. The NQ just flipped the YBR up. That could turn into a long trade after a couple down closes. Okay, so the YM is a potential. The ES is no longer a potential. The ES has just flipped the YBR up. The YM is probably going to flip it too. I hope it does, actually. It's too far away to give you a short trade, so it's not going to be a trade at all on the YM. And we have 30 seconds left. So are we going to get one more trade here on the NQ? Time will tell. It's really the only one that could give it to us. I mean, the oversold needs to go down just here and then close up. It closed up first before it went down. Well, sadly, I think we're just going to have to end it like this.
That's the truth about trading.
It is. It is indeed. I have a doctor's appointment I have to go to, or I'd stay a little longer. I just want to make sure the numbers are right. Yeah, we're only plus 5 ticks. That's right. Between the two of these. So we stopped out on that one once. I guess we were just barely up on the YM. And we were negative on the NQ and then we got positive. Okay, so this is how we're going to end it for this session. Plus 15 on the NQ, minus 10 on the YM. Plus $250 overall with 10 contracts. 75% of our trades were break even or better. We had 2 stop outs with overall trades with 2 stop outs. And we had 15 minutes trading. So this should be all correct. No, this can go to 36. 36. Okay, and this number over here, I think, has to go to 26. Hey, you know what? I just found the formula. This equals this minus 10. There. Because then this calculates off of that number. Random number out there in the spreadsheet. Anyway, so in this session, we were up $250 with 10 contracts on, or $25 with one contract on. I think we did get to the point where we were up over $100 a contract before we stopped out there. That was exactly before we stopped out there. We were exactly $100 a contract. But anyway, we're averaging $133 per contract in the time that we have to trade in this session. Okay. And if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Purple button, and it will bring you to this registration page. Just fill it out. Okay. That will get you everything you need to get into the room with us in the morning for 5 consecutive business days. There. Now I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. There is Dwayne.
Alrighty. Recap of the morning session.
Today it took 2 minutes and 1 trade to get to $1,000 per contract. $1,000 for 10 contracts. $100 per contract.
Good job.
Thank you.
Okey-doke. All right, guys, we made it through all the different markets in granular fashion. So if you missed any part of today's broadcast, when I sign off, all you got to do is go to youtube.com/CFRN, and you can watch all of today's broadcast in its entirety from start to finish. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, and literally see how we've evolved over the years, day by day by day. Now, obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips. And some of you have been along with us for the entire ride. So we're sitting right on top of the daily BBC, and we got blue and climbing below. So if this support area holds right here, that could send price back up to resistance at the 50% fib extension and the black step line. And if by some miracle we overcome that, then the next major resistance would be up at the 62% fib extension. And of course, yesterday's high, and then the all-time historic high. So if we were to close right here, right now, or if we were to close here at the close today, I would consider that a good thing, considering how far we've come off the low of the day. Today looks like Fed day, when this was actually Fed day. That's one of the tamest Fed days I think I've ever seen. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member. She'll send you all the information you need to get signed up. Once you become an official member, you'll have access to 2 hours of live training every trading day. It's an interactive environment. On top of the live training for 2 hours each day, you have access to private one-on-one mentoring, no extra charge, you just got to ask. The strategy you learn, the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over. It's a never-ending cycle. It's simply how markets work. As a passport holder, you get the Logic 247 alerts. Those will help you learn how to read a chart. You get the concierge trade alerts, typically 5 minutes ahead of the Globex Open each evening. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones, and once they're published, they're carved in stone for for the entire week. They don't change in any way whatsoever. And you're able to attend the Members Only Workshop every Thursday night at 8 p.m. Eastern. Plus, you get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for today. This experience is preparing you. 1 Samuel 17:37. The Lord who delivered me from the lion and the bear will deliver me from this Philistine. Every experience in our past has prepared us for some future opportunity. God doesn't only redeem our souls, He also redeems our experiences, both good and bad. He does it by refining our character, developing our gifts, and teaching lessons that we can't learn any other way. We learn the most important lessons in the classroom of life through firsthand experience. The tests are challenging, but no curriculum is more effective. And how you pass the test is by growing in character, developing the gift, or learning the lesson that God is trying to teach you through that experience. God is at work in your life. He is helping you get ready for your date with destiny. And He is doing it in ways that are practically imperceptible. David realized that slaying the lion and the bear prepared him to bring down Goliath. And it's not until you face your biggest challenge that God identifies how, when, and where He prepared you. That's when you realize that the battle was won long before you stood on the battlefield. It was necessary for Moses to tend sheep for 40 years before he could lead the flock of Israel. The disciples had to fish for fish before they could fish for men. A time of preparation precedes every divine appointment. And if we surrender to the preparation, God will execute His promise. If we don't, He won't. This is because God never sets us up to fail. The time you spend in the shadows is preparing you for the time when you will be in the limelight. The time you spend on the sidelines is preparing you to be on the front lines and to win. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.